Hi, I'm Melinda Payan, owner of The Truth About Lending, a licensed mortgage company. Buying a home is one of the most important purchases that you're going to make in your lifetime. This video is designed to help guide you through 10 critical steps of buying a home and to give you the advice that you need during the mortgage process. Step 1. Set a monthly budget for your mortgage payment. Ask yourself, how much do you want to pay each month, and what is that figure that you don't want to go over? Tell your loan officer to base his or her pre-qualification of your ability to get a mortgage on this figure. Often loan officers will try to get you to a higher loan amount or the maximum you qualify for because all loan officers work off a percentage of the loan. The higher the loan, the more money they make. Stick to your plan. Step 2. Figure out how much you want to pay out of pocket to cover all of your costs. Make sure that you have a figure in mind that you don't want to go over, and make sure you communicate that to your loan officer. Keep in mind that your down payment is a percentage of your loan, but you also have closing costs and items that are called prepaid items. Closing costs are one-time costs associated with getting the loan done. Prepaid items are things you will have to pay on a regular basis, such as insurance on your home, which must be paid for the first year in advance. The bottom line is that it is still money coming out of your pocket up front. So make sure you are very clear with your loan officer that you want to know what all your expenses will be and to not go over whatever number you have established as the maximum cash out of your pocket. Step 3. Research your loan officer. Now that you have a plan in place, you want to make sure that you're doing a good job researching your loan officer. Find out if they're licensed or they're not, because remember, they don't have to be licensed to work for a bank. The best place to start is to check your loan officer's qualifications on the National Mortgage Licensing System, also called the NMLS. You can go to the Consumer Access website, which is nmlsconsumeraccess.org. This website will allow you to see the loan officer's work history, and you can see how many years of experience the loan officer currently has completed. Step 4. Understanding your loan program. It's very important that you understand the loan program that your loan officer is suggesting that you get into. Make sure you ask all of the important questions regarding the program and that you have a clear understanding of it from the beginning. You must understand the program your loan officer is suggesting to you. Is your loan officer suggesting an FHA loan as opposed to a Fannie Mae loan? Ask him or her why. Did you know that FHA requires a down payment of 3.5%, but Fannie Mae requires a down payment of 3%? Many loan officers want to take the easier route with their customers, and that sometimes may be an FHA loan. Make sure you ask questions. Oftentimes, it is more profitable for the lender to offer you an FHA loan as opposed to a Fannie Mae loan. The loan officers tend to not explain why one loan is better than the other. Step 5. Get estimates of all of the costs in writing. Make sure you ask your loan officer to provide you a written estimate of the cost, interest rates, and payments so that you have everything in your hands in writing. Typically, you can avoid paying lender fees such as underwriting, processing, or loan origination fees or points by negotiating with the loan officer. Ask the loan officer what he or she is estimating for your annual taxes and annual insurance rates. Check with your realtor or a professional in the area to see whether that is consistent with what you should expect. If the taxes or insurance are significantly different, that will drastically affect what you pay each month as well as how much you are qualified for. If you are working with a loan officer who is not local and not familiar with the taxes or insurance in your area, he or she often may make mistakes that could lead you to not qualifying for the loan later on. Step 6. Find out about other costs involved. Remember, the loan officer is only required to disclose to you costs that are associated with them, but other costs like inspections for your insurance agent or fees that your realtor might charge you are not required to be disclosed by the loan officer. Make sure you ask your loan officer if he or she has included an estimate of those costs. Often loan officers don't include those costs. Speak with a local insurance agent in your area or a local realtor to find out what those costs average. The last thing you need is to come up with more money unexpectedly. Step 7. Shop around for your interest rates and your fees. Did you know that you can shop around for many services that are required during the mortgage process? A list of those services that you can shop for would be title work, which is commonly done by an attorney or title company to ensure that you are buying the property free of any liens. Survey, which is a map of the perimeter of your property and is required by the lender. Homeowner's insurance to insure your home. A home inspector or an inspection company. It is important to note that when you are shopping for interest rates with lenders, do not let more than one lender pull your credit. You do not want to have multiple inquiries on your credit. You can simply tell the loan officer what you believe your credit score is and let him or her give you a quote based on that score before you make a decision as to which lender you will choose. Step 8. Gather documents. Gather all your documents. Be organized about the documents and how you present them to your loan officer. You will typically need the following just as a starting point: the last 2 years of tax returns, all pages and schedules, the last 2 years of W-2s or 1099s, the last 30 days of pay stubs, the last 2 months of all bank statements for any liquid assets you are disclosing, such as retirement accounts or stocks and bonds, a copy of your official ID, any explanation letter for any derogatory credit that's on your credit report, even if it's very old, and a gift letter. If you're getting a gift for the down payment, usually there's a form letter that the lender will provide you. Other documentation might be required to show where you got the gift from. Step 9. Make sure your income was reviewed accurately. There are statistics that show over 40% of the loans that were denied were because the loan officer did not accurately review the income from the beginning. This is extremely important. Make sure your loan officer has reviewed your tax returns and pay stubs before he or she pre-qualifies you. Not just your W-2s, but also your actual returns. Even if you are 100% sure your income is simple to figure out, you must be sure this is done. Many loan officers do not do a thorough job in the beginning, and it can lead to heartache and money lost later on. Specifically, ask your loan officer the following questions. Do I have any unreimbursed employee expenses that lower the income that I could use for my loan application? Do I have any Schedule C losses that could lower the income I can use for my pre-qualification? Did you average my overtime, commissions, or bonus income over a 2-year period in order to determine what I qualify for? I find this is the biggest area where most loan officers make mistakes. Make sure they check everything up front. Step 10. Ask about interest rate lock-in policies and procedures. It's important that you understand if your interest rate is locked in and for how long it's locked in, and find out what are the procedures the lenders follow in case you have to extend your interest rate or if the interest rates improve. Do they offer a float-down option if the interest rates improve? If so, is there a cost for this option? What if you don't close on time to make the lock? What will happen if the lock needs to be extended? What will be the cost to extend this interest rate? Know your rights and your options. Remember this, know before you owe. In conclusion, if you follow these 10 steps to guide you through the home buying process, it'll make your entire experience much smoother along the way. For more information, give us a call at 888-76-TRUTH or online at thetruthaboutlending.com.